Continuing coverage as the Federal Reserve leaves interest rates right where they are. And it's quite the about face as the central bank made 3 rate cuts last year. But the ongoing conflict in Iran and surging oil prices are now throwing a wrench into what comes next. So here to help us break down what this means for your wallet, Assistant Professor Collier Strong from Wayne State University. We appreciate your time. For those watching at home, can you just kind of detail what this does? What does this unchanged rate mean, and what does it mean for them?
So I think a part of what you need to understand is that the Fed has this dual mandate to keep unemployment low, maximum employment, and keep interest or inflation low too, right? So they ended up a couple years ago raising interest rates because inflation was high, and we all remember that. And they've been trying to bring them down. But now that inflation's kind of under control, but the problem is that inflation has kind of been stubborn, right? And so inflation has been kind of coming. They brought interest rates down, and inflation has kind of started to come back up a little bit, right? So yesterday we had new inflation numbers, and the month-over-month inflation was 0.7%, which was significantly higher than the expectations that were 0.3%. And so I don't know how much yesterday's inflation numbers impacted things. I think they kind of made their decision before that. But it certainly didn't help, right? And it kind of just shows that they were right, that inflation is kind of causing a problem. And part of this too is that you have the war in Iran that is increasing oil prices, and that is also putting extra strain on inflation, right? If oil prices go up, everything else goes up.
Right. And I want to actually hone in on that point there, Mr. Strong, because, with the war in Iran, we're hearing about everything kind of going up from fertilizer to just goods and services that pass through the Strait of Hormuz, including oil prices or oil through that area. How does that specifically impact the Fed decision that we saw yesterday?
So that impacts the Fed's decision because every good and service that you get, most of them anyway, are tied to the price of oil, right? You need oil to ship your goods and services. A lot of goods require oil to produce. And so when the price of oil goes up, that puts additional strain there.
Yeah. Let's talk about the uncertainty with this. I think a lot of people, after the 3 rate cuts that we saw last year, this first one maintaining the rate, and that coupled with the uncertainty in Iran and about how long this will last, does that also play into it and what we could see in the future here?
Interested students of all that, and
yeah. So in the future, they had a bunch of rate cuts. And part of it is that they have brought down interest rates quite a bit. And so I think that they want to see, now that we've brought interest rates down pretty quickly over the past couple of months, they kind of want to see what actually happens with that, right? Does inflation, is inflation really under control? Or now that we've brought interest rates down, are we going to start seeing inflation again? So I think that there was kind of already a little bit of an appetite to hold off on more interest rate cuts, just to kind of see if we've gone down too much or if we need to keep going down a little bit more. The other thing too is we're probably getting close to the natural interest rate anyway. The natural interest rate, probably the long-term target's probably about 3%. So we're 0.5% above that. And so they probably feel a little bit more comfortable holding off where they're at anyway. So going into the future, go ahead.
No, I was just going to ask too. I think my other question in all of this is, if I'm sitting at home and watching all of this play out, I'm hearing, they're maintaining the interest rate. Is this should this be a panic moment for people at home who might have, interest to pay down the line, or maybe they're looking at buying a house, car, have a credit card, line of credit? Does that play into this, or should people be hitting the panic button at all on this?
I don't think people should be hitting the panic button. I think part of this too is it depends on how long this war in Iran goes, right? If this is a short-term thing, like people are saying, then I think that drastically changes the calculation for the Fed in going forward. But I think probably I wouldn't be hitting the panic button yet. I think it's kind of just a wait and see mode. If the Fed was raising rates, which is, I think that there's an argument that they could. I think there's people in the Fed that would probably like that. Then maybe I'd be hitting the panic button. But I think this is more of a let's wait and see and hold off on cutting rates than we're not going to cut rates at all.
All right.
I think the long term people are still saying that rates are still going to come down, but it's let's hold our horses for a minute and see, and let's make sure that we don't go too far, right? Because that would cause more problems in the end. Yeah.
Well, I have one more question for you, and I got about 30 seconds left. What are you going to be watching in May when the Feds have their next meeting to look at the interest rates?
I think a lot of it depends on inflation over the next couple of months, and whether the war in Iran is still going on at that point, right? So we'll see. Those are the two big things, and also unemployment. If unemployment keeps ticking up, then that also is going to impact things, right? Kind of in between a rock and hard place between unemployment going up and inflation also ticking up at the same time. So we'll see what they decide.
All righty. We appreciate your insight this morning. Thank you so much for being with us.